Joining me is the great Lobo Tiggre, who we've had on many times in the past, and we're always really appreciative to have on. We know that our audience loves getting to hear from Lobo. Lobo, thanks so much for doing this.
Happy to be on the show.
So, I like to ask when I go to conferences like these, when you're having conversations with other investors, with colleagues, mining executives, analysts, bankers, whoever you're chatting with, what the buzz of the conference is. In your view, what's the buzz here? What's everybody talking about?
Oddly enough, it's not like uranium is the hot commodity this year, or gold or copper or what have you. The buzz is project finance. Like, what a weird thing that is for me, or at least that's what stands out in my mind, is people kind of pissing and moaning about how difficult it is to get their favorite project funded, or people crowing about how, our company is fully funded and that sort of thing. It's an odd thing, but I think it is not sort of, don't want to mince words. I think it's important. It's telling you something about the state of the market. And I guess the actionable takeaway here is that if a company can get funded, that's the market mechanism helping you out. If you've got a project that's obviously got merit, or the smart money is willing to go in there, then this lack of funding is helping you sort the wheat from the chaff, or at least the obvious wheat can attract the funds, and that helps you narrow the odds, put things in your favor.
Yeah, that's definitely some of the more sophisticated investors I know that buy shares open market make those comments to me. Is they want to know that if they're going to buy shares on a project, that that the company has that ability to fund itself. That there's people involved who have deep pockets that aren't going to just allow their investment just be a bunch of dead soldiers towards a project that runs out of runway. It seems like I really appreciate that take. You're the first person who said that. And then normally we're getting a lot of people saying that it's silver. I had one person who said that it's uranium. When we were at Beaver Creek, which is, for our audience who's unaware, that's a conference that's mostly precious metals focused in Colorado every September. So we were there last September. That was largely the focus, or the sentiment, I guess I should say, was the whole how nobody wants to buy our stock. And I haven't been feeling that as much here, but I've mostly just been chatting with companies who are generally putting on a bit of a rosy face.
Well, also, Rick doesn't pay me to say this, but I will say, he's Rick Rule, and he's been basically training this audience for decades. And the people who have the wherewithal to come here to this 5-star resort and pay Rick's fee and attend this, I think they're kind of a cut above the average, retail, guy who just buys something on impulse because somebody on Twitter said it was a good idea or whatever. These people are here to do due diligence. These people are here because they care enough about their money to put some effort into actually vetting their speculative investments. So it might be the case where the vibe you get at a place like this would be the same if you could somehow sample the average investor out there.
Now, I remember, I think it was at the end of 2022, we asked you, what commodity are you the most excited about? You said uranium. You thought that uranium had a good little path ahead of it. And kudos on that, because I think it ended up 2xing from there, which was
2023 was very good for my portfolio on the uranium front.
And so I got to ask you, what are you most bullish about now in terms of commodities?
It's a little bit complicated, and I don't want to draw the answer out, but I have to say that I have been asked this question going into 2024, and it was gold. And it's kind of like gold bug likes gold. It's not much of a headline. But given the context that last year it was uranium, I think it's meaningful that this year I said, no, it's a different yellow metal. And fast forward to now, here we are 7 months in, a bit late in the tooth, but here's the important thing is that all the reasons why I said gold rather than the other yellow metal, they're still ahead of us. The capitulation of Team Soft Landing to know we're actually going to have a recession, that's just starting to happen now. The latest labor reports, retail sales, the softening in the economy that even Powell has acknowledged in the last couple of days in his testimony. Here we are in July, and this is just starting. And gold's, flirting with all-time highs. So Gold's had a great year already, but not because of the reasons that I would have said. So the takeaway though from this is, well, gee, Lobo, it's kind of late to say gold. It's already done well. And what I'm saying is, it has for other reasons. We can get into that if you want. But the reasons why I'm bullish on gold this year have yet to come into play. Therefore, I think it goes even higher. But I also, just real quick, I also like silver a lot. I see a lot of upside volatility in silver. And I'm liking uranium more because it's on sale. And not only is it on sale, it's like stubbornly on sale. People are getting bored and angry with it. You know how Rick likes to say, I love hate?
Yeah.
So uranium isn't hated, but its next best thing is it's boring, and that's creating opportunities.
Lobo,
But the number one answer, sorry, was gold there.
you're always straight with us, and I gotta ask, the next gen deal with to buy the physical uranium. What they buy was it? They did a $300 million debt deal. It was 7 million pounds. I feel like that was the top of the market for uranium. Am I wrong?
Well, when the companies, and not funds, right, but when miners started buying uranium at $30 a pound, I thought that was brilliant. Like if, because nobody was, except maybe Kazatomprom, but nobody's going to make money at $30 a pound. Uranium had to double or more from there to really have that incentive level that would bring new mines into production and so on. So if you're a uranium miner or developer or explorer, you have to believe that uranium's going to $70 or $80 a pound, or else you wouldn't even bother in the business. Yep. Like you pick up your marbles and go home. Yep. So, like by definition, you have to believe that's where uranium's going. So why not buy it at 30? Because you can double your money and sell it at 60 or whatever. And by the way, if you're at 70 or 80, now you're building your mine and you need cash to do that. So if you bought uranium cheap and now you can sell it when you're at the incentive price, you've got a bunch of money that you can put into building your project without diluting your shareholders. So I thought that was brilliant. But the later additions to the game, when people are buying uranium at the $70, $80, or when we were in triple digit territory, and people are, let's say for that to work out, it requires the greater fool theory to play in, right? Buy high, sell higher, or hope to sell higher. So I wasn't so keen on the later deals in this space. I liked the early ones. I thought that was absolutely a no-brainer.
Now, I saw you just tweeted about, I'm not exactly sure who the source of the information was, but the U.S. interest payments are now outstripping defense spending.
Yeah.
And to me, this is really interesting because when we think about how much debt's been created and suddenly taking interest rates from 0 to 5%, so especially so rapidly, and the impact that has on not just government debt, which we're like the interest rates now. I don't know if that makes it the number
but
two
other
line
debt
item.
benchmark to the 10-year benchmark and all that stuff. It's all tied together. Sorry, where were we going with the question? Yes.
So where we were going with it was we have all this government debt that is super. It's going to be super challenging from a budget standpoint, and then we got personal debt, which in Canada right now looks like a nightmare given the fact that we basically mortgaged
You mean the budget won't balance itself?
And I was saying this earlier today. It's such a funny quote, Lobo, because at the time when the Conservatives ran those attack ads early on in Justin Trudeau's days as Prime Minister, you kind of rolled your eyes and go, okay, like he said it, like it's probably out of context, whatever. But like there couldn't be a quote that is just going to ring more true for his time as leader of Canada. That we elected a Prime Minister who said the budget will balance itself, and now we're just probably in the worst mess we could have ever imagined.
I am sorry for my Canadian friends. I feel for you.
But
hey, my president said we're going to beat Medicaid or Medicare. I just had a Biden moment, didn't I?
So where I'm going with this is, do you think that the Fed is going to give up on the fight against inflation, and that they're kind of between a rock and a hard place?
Yes. There's no question. When push comes to no question. Never say never. My expectation is strongly in the direction that they throw the dollar under the bus. When push comes to shove, voters screaming in pain get much more attention than Forex traders or investors. And the Fed has a dual mandate. I mean, the testimony we've just heard in the last 2 days is reminding us that now there's other risks besides inflation. I mean, Powell is doing his best to sound hawkish. Yes, we're committed to 2%, while what he's saying is, but these other things are more important. So, of course, do we believe anything he says? Not really. But in the context, the Fed has a dual mandate. They're already, they're already talking rate cuts. Even even the much reduced dot plot, right? We had 6 or 7 cuts this year at the beginning, right? And then it get pulled back, and now maybe one, now it's maybe 1 or 2, and so on. They're still talking rate cuts when we're still not at 2%. In fact, the expectations for CPI, which as we're speaking is tomorrow, US CPI day is tomorrow, the expectation is for the monthly change to be 0, but because base effects have now gone into reverse, that's no longer a tailwind, the headline CPI numbers are actually expected to go up to, I think, 3.4 or something. But we're still talking rate cuts, even though CPI, and they could say, oh, we like super core, super duper uber core, or whatever. But the fact remains, headline CPI is expected to go up. Not by me, tinfoil hat wearing guy. This is the mainstream market expectation. And yet we're still talking rate cuts. So that's the answer to your question. Like the Fed is already telling us that it's the dollar that goes under the bus. We're not going to defend the value of the currency. We will surrender to inflation if the alternative is higher unemployment, systemic risk, that sort of thing. It's Andrew Bailey and the guilt crisis. Like when the brown stuff hits the fan, it's the currency that goes under the bus, not the voters. Sorry, the poor, long-suffering laborers.
So help me connect. We're losing the fight against inflation, and theoretically that's supposed to mean precious metals do well. Help me connect those dots.
Well, nominally, gold is near its all-time highs. What are you missing?
Does that mean that we're going to see central banks continue to buy?
But it's not just central banks. Like we just had the reports. And again, do I believe Chinese statistics any more than US statistics? No. But we just had the reports from the Central Bank of China that for the second month in a row, they didn't buy any more gold. So a lot of the people that are saying, oh, gold's up this year because of China, it's all China. Well, at least according to the Chinese, no, it's not. I think that the hockey stick we've seen in gold this year has to do with one of our favorite Rick Rule things. I'm sure you've heard him say the global allocation to gold over the decades, the 4-decade mean is 2%, right? We've all heard this. It's been 0.5% in these recent years. So we don't need a mania, but if we just revert to mean, it's 4x investment demand for gold. I don't know if that'll ever happen, but even if it only goes halfway there, that would be 2x, right? And so like people say, well, it's the war. Well, the new war is now since last October. The hockey stick was this year. Or people say, oh, it's China. Well, A, China just said they're not buying. And B, China and the other BRICS central banks have been buying they've been buying even longer. But the bigger buying has been since the weaponization of the dollar, since the second invasion of Ukraine, which is now a couple years behind us. So like, none of these things in the headlines are really an adequate explanation for this year's hockey stick. So I think, and I can't prove this, but this is my theory, is this thing that Rick has been telling us about for years, it's finally starting to happen. It's people, and I do see this on mainstream TV, not wonderfully accurate, focused services like TheDeepDive.ca, but Yahoo Finance and those guys out there, they're starting to talk about gold without laughing. Whereas before it's like, Tina, what are you going to do? Buy gold? Whereas now it's like, well, you could buy some gold. You could hedge with some gold. So I think this is happening. So no, I'm not waiting for the central banks. Sorry, but to try to answer your question, lower rates tends to be good for gold. So if this isn't tinfoil hat anarchist Lobo Tiggre, this is the Fed guiding rate cuts this year, that's actually bullish from gold. If we're looking at the mainstream expectation being bullish from gold from a 2,400 level, that's pretty exciting. Now, if I'm right, and I'm still in team hard landing, and I see, a much bigger pivot from the Fed and fiscal policy, I think that's even more bullish for gold. So I think that the price we're seeing now is partly these different actors, But I think it's also partly this portfolio allocation of people looking at the world and saying, you know what, inflation is coming, and we want to hedge against that. I think that has more to do with where gold is at right now than China's buying.
Lobo, one last question for you here. Are you willing to throw any names there right now that you're really excited about? I know you don't really hold these back for your subscribers, but,
right.
but can you give the deep dive audience something?
Okay. No, I won't give you a name, but I will say that there are companies like my work on the pre-production sweet spot is out there, right? The cat's out of the bag. Everybody knows the pre-production sweet spot is a nice way to play. There's a whole passel of companies that are now like on the verge of entering the pre-production sweet spot. So my actionable advice to the person who's willing to do a bit of due diligence is look for these stories. This isn't early stage exploration. This isn't drilling off a discovery. This is deposit in hand, 43101 compliant deposit in hand, feasibility study in hand, that we're ticking off the final boxes: permitting, financing, right? To get into the
So going through those final steps,
yes,
looking for that final permit, those kind
yes,
of companies.
and in this context of a very high gold dollar exchange rate, at least in the gold space, I think there's a high reward for a relatively low risk to be found in this space. Look for those guys that are about to go into the pre-production sweet spot. That would be my tip of the day.
Well, Lobo, thanks so much for doing this. It's nice to finally meet you in person, and we always appreciate you being generous with your time and talking to our audience, because it's always a big hit with our viewership.
Thank you.